How's it going, everyone? It's Sam. We're going over Li Auto because they had their earnings today and they're up 19% now. The other Chinese EV stocks are also up massively too. So I'm going to go through what Li Auto presented this morning, and I'm going to compare the four major EV players, including Li Auto, Xpeng, NIO, and Tesla. I'm going to compare their numbers and kind of give you an idea for where they all sit. So if you guys like this, please leave a thumbs up. I really appreciate it. There was some math involved here. And also, if you want to support the channel in another way, you can check out the link down below to WeBull. You can sign up and get 3 free stocks. And right now they have a promotion where if you refer someone else, you get 6 free stocks. So you can get 6 free stocks. I believe they're all worth at least $8. So you could get your 3 free stocks from me, sign up someone else, and then you could also get 6 stocks from them. So definitely check out that link down below. Just deposit $100. So let's take a look at these different stocks today. So Li Auto is up almost 20% right now. Xpeng is up about 7% right now. NIO is up about 7%, and Tesla is down. So everyone's ragging on Tesla right now. You can see Li Auto over the month has been about 89% up. Xpeng over the month is up about 141%, and NIO over the month is up about 135%, and I believe Tesla is down. Yeah, so Tesla is down about 10%. So let's look at what Li Auto presented today and why the EV market is so crazy right now. So they just reported their third quarter earnings, and they had a loss of 8 cents per share on revenue of about $370 million. So they were expecting a loss of about 4 cents a share. They lost on the EPS, but they actually beat on the revenue by a significant amount. You can see here almost 10%. Revenues rose 29% versus the prior quarter, and their deliveries increased to 8,660 vehicles sequentially. Gross margin expanded to 19.8% from 13.3% in Q2. So pretty good gross margin there. Their forecast for Q4 is to hit between 11,000 and 12,000 units, which would be an increase of about 30 to 40% versus Q3. They're expecting revenues up to about $500 million, which is very significant. So they exploded today. Their stock price rose dramatically, and this is after they kind of rose a good amount yesterday on Xpeng's results, because Xpeng went up about 33% yesterday. So I thought we should compare the stocks. So I matched up Tesla, NIO, Xpeng, and Li Auto, and I compared them on a variety of factors. So I've had a lot of people asking me for this. Let's go through one by one and kind of compare each of these. So if we just clear this out, this is in millions, and NIO, I'm putting NIO in red because these are their Q2 numbers. So obviously their market cap is real time, but the rest are Q2. They still have to announce their earnings next week on November 17. So Tesla's market cap is $383 billion versus NIO's, which is $71 billion, versus Xpeng, which is about $36 billion, and Li Auto, which is $32 billion. So obviously that's kind of how it breaks down. I mean, I could have told you that without having to look them up, but you can get a general feel for their values there. Tesla had 140,000 deliveries in Q3. Obviously, they are the major player in the EV space, significantly compared to everyone else. NIO had about 10,300 in Q2. So NIO actually has come out with their delivery numbers. They come out pretty much monthly, and they delivered closer to about 12,000 deliveries. So I wanted to put Q2 in here just to keep it similar for the rest of this, but it was about 12,000 deliveries. We still don't know their revenues and all that, but they had about 12,000 deliveries. Xpeng had about 8,600, and Li Auto had almost the exact same amount. Tesla was the only company on this list that had positive earnings per share. NIO still negative, Xpeng still negative. Li Auto actually pretty close to positive. And actually we'll skip over here to gross margin to kind of explain that. And this is not a comprehensive list by any means. I mean, I'm sure there are better ways of doing this too, but I just wanted to hit on some of the major factors. So I believe that Li Auto is pretty close to actually positive earnings per share, because they have a very high gross margin. They increased this to almost 20%, which is getting closer to Tesla. So I think Tesla believes they can get in the 30s. So that is a goal to hit. But right now, Li Auto is by far the highest in the gross margin category besides Tesla. So let's see their Q3 revenues. Obviously, Tesla's at the top with about $8.77 billion. NIO in Q2 was able to get about 500 million in revenue. I think this will increase to maybe about 600 or so this last quarter, based on the fact that they had about 500 million with 10,000 deliveries. You increase that by 20%. That's about 600 million. So I think that they'll push that up a little bit. Xpeng had about 293 and Li Auto had 370 million. So obviously they're selling a little bit more expensive cars, or they have some additional revenue because they do have about a 20 to 30% increase over Xpeng in revenue, and they sold just about the same amount of cars. So what is the price to sales? This is something that I like to look at. It's hard to just look at earnings per share because all these companies are at different points in their business cycle. So let's look at their price to sales ratio. And I think that's one of the better indicators for how expensive these stocks are. So Tesla is obviously the least expensive. They're the most mature. They have the least amount of growth ahead of them. They are selling at about a price to sales ratio of about 11, which is still really high. I'm not going to lie. That is a high price to sales ratio in terms of the general market. NIO is at about 36. Now, with the increase of 20% or so in their deliveries and most likely their revenues, this will come down a little bit. So this should be closer to about 30 or so. Xpeng is up around 30 and Li Auto is around 21.7. And they're almost earnings positive. So if I was to have to invest more into Xpeng or Li Auto, I probably would pick Li Auto. This is not my financial advice. I can't give financial advice because I'm not an advisor or anything like that. But Li Auto has better margin. They have just about the same amount of deliveries, and their price to sales ratio is a little bit more attractive. I mean, I'm sure there are things that I'm missing. I know Xpeng keeps their manufacturing in-house, and I'm not sure if Li Auto does because honestly, I haven't looked into Li Auto a lot, but you can see they have a lower price to sales ratio. I do own Tesla. I do own NIO. I do not own either of these, but I just wanted to hit on that. I do want to say though, NIO has their earnings coming up on November 17th. So be on the lookout for that. I believe that is Tuesday. It's the 13th, 14th, 15th. It's Tuesday. So definitely be on the lookout for that. I will be making a video, I'm sure. I'm not sure if it's before or post market hours, but be on the lookout for that because that could cause the stock market, could cause the auto market to kind of go insane again. Now, again, there are risks to some of these different manufacturers. I've talked about this in the past with EV, that a lot of the time people just assume that EV is going to stay in these companies, I think, because they're going up, hundreds of percents over the last year. And I think the traditional car manufacturers are going to put up a good fight. But make sure you're doing your own research. Make sure that you are investing wisely. And thank you for hitting the like button. Thank you for hitting the subscribe button. Thank you for commenting below which of these you actually own. I'd be curious. And then also, thank you for checking out WeBull. If you want to see my video from yesterday where I talked about Xpeng, definitely check out this video here. They had some killer numbers, and I kind of compare it to NIO. Thank you guys, and I will see you in this video.